Hey guys, in this video, I'm gonna cover market structure. It's a continuation of the previous video where I covered the basics of market structure, right? So if you didn't check out the previous video, please go check out the previous video. I covered different types of trends, different types of market structure phases that we tend to see, and how price forms highs and lows to distinct which phase of the market we're currently in, right? So in this new video, it's a build up, right? It's a build up from the previous video, uh, where we'll see different parts of a trend, right? So we'll see different parts of a trend. And when we're in a downtrend and an uptrend, the different phases also within these trends that are formed that we need to look out for, right? Because remember, the whole point of learning this market structure or movement of price is to establish whether we're gonna push up or push down, right? So as you can see right now on my screen, I've got a description of price pushing down. So clearly this is a downtrend. From the previous video, you see clearly it's a downtrend because we see price forming highs that are lower than the previous high and lows that are lower than the previous lows, right? They're being broken, right? And then for every movement to the downside that we see, it breaks structure, right? So for example, this is the first movement right here, right? So this movement right here, as we can see, it's breaking structure to the downside, right? And then we get this other movement also that's breaking structure to the downside, right? So for every movement that's breaking structure to the downside, we identify it as a swing, right? So since we see that price makes highs and lows, right? So for the movement that makes that breaks the lower low of the trend, right, is called a swing, right? And I've just defined the swing here. So a swing, this is a strong impulsive move that breaks structure and continues the trend, right? So that breaks structure and continues the trend. So basically what that means is that, as you can see, we are in a downtrend, right? We're in a downtrend. And if we're in a downtrend, we want to see price breaking structure to the downside, right? Because we know that structure is its highs and lows, right? So if price is going to break structure to the downside, right, it will confirm that we're in a trend. We're still in a downtrend, right? So when price pushes down and breaks structure to the downside, it's pushed down by a certain phase, right? And then this phase is usually impulsive, meaning that it's a strong phase, right? It's a strong phase that pushes down and breaks structure. So this phase is identified as a swing phase, right? After a swing phase, we tend to see a push or a pullback, right? Within the swing, right? So we see a swing, right? And then we see pullback. Then we see another swing, we see a pullback. We see another swing, we see a pullback, right? So as you can see evidently, the swings are usually strong movements that break structure to the downside. And then the pullbacks are usually corrective movements, right, against the trend before we actually see the swing, right? So in most cases, the pullbacks are actually corrective, meaning that they are slow in movement, they are weak, right? So if I was going to illustrate in a more graphical way, I would say an impulsive move is a strong move to the downside. Then we have a bit of a correction, right? We have a bit of a correction, and then we have a swing, right? Pullback, 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 swing, right? So in rare cases, we have a swing, and then we have another strong push to the downside, and then another strong push to the downside, another strong push to the downside. Usually these pullbacks are usually corrective, right? They're usually corrective towards swing and then a continuation, right? So that's how trends are formed. So trends they have got phases within themselves, and the phases are just usually a swing and a pullback. So this swing and a pullback concept is quite a unique concept that I need you guys to understand and remember going forward, because it's a concept that we're going to use to determine how we're going to enter the market and all that stuff, right? So usually in trading, we want to trade off these peaks, right? Want to trade off these peaks, want to jump on this movement, either movement to the downside or movement to the upside. Hence, going forward, I'm going to show you guys how we can use the swing and pullback concept on how to enter the trade using this swing and pullback concept, right? So I'm going to jump to the charts and show you guys a practical sense on how you can identify these swings and pullbacks, right? So when we go to these GBP USD charts, right? I just highlighted this to show you guys how an uptrend movement would look like, with putting in perspective of a pullback and a swing, right? So first and foremost, we see this push to the upside. As you can see, it's quite a very, very strong push, right? And then we have this pullback right here, right? We have a pullback, and then it's after the pullback, we have another push, right? That's breaking structure at this point, right? So remember, price needs to break structure to confirm that we're pushing to the upside, right? So price breaks structure there, and then we have a bit of a push, pullback to the downside, right? Pullback to the downside. And in this case, you see price forming highs and lows, right? Highs and lows that are higher than the previous high, and lows that are higher than the previous lows. So in this case, we see price forming that low right there, and then it goes for a high, right? And then it goes for a low, right? And then it goes for a high, and then it goes for a low, and then it goes for a high, right? So as you can see, price here keeps on breaking structure to the upside, right? It breaks structure here, and then it breaks structure here, right? So these phases, right? These phases you gotta put in consideration. These ones, right? We gotta swing up there, and then we gotta pull back into this phase, right? And then we gotta swing to the upside, right? So as I said earlier in the video, saying correction, usually pullbacks are corrective moves, they are weak moves compared to swings. As you can see, swings are quite strong, right? They're quite impulsive. Just shoots up, gets down a bit, and then shoots up again. Gets down, it shoots up. It gets down correctively at this point. As you can see, it moved from here to here, correct? And then it pushes up, right? So you gotta put in consideration, you gotta learn that these phases are quite significant, because going forward, we're gonna use these phases in how to enter into the market using these concepts, right? So this is how you identify the swings and the pullbacks in an uptrend, right? And then when you go in a downtrend, the same thing gets to happen, right? So the same thing gets to happen. We see a push to the downside, right? Price forms a low, a clear low, right? Price forms a clear low, and then price goes from the clear low, price goes for a high. So we had a high here first of all, and then price goes for a low, and then price pushes up for another high, and then price pushes down for a swing, right? Forming another low, and then it goes for another high up there. And as you can see, the highs are lower than the previous. They're lower than the previous high, and the lows are lower than the previous lows. All right, and then from there, we'll see price push down, right? Price pushes down, goes for a low, price pushes up, goes for another high, and then the trend continues just like that, right? So we see that there, we see that impulsive move to the downside, and then we see that corrective move to the upside, right? Yeah, so this is a more practical sense of how price moves in a downtrend. So in a downtrend, we see price making these lows, right, that are lower than the previous low, highs that are lower than the previous highs, and then moving impulsively to the downside, corrective upwards, impulsive downside, pullback, swing, pullback, swing, pullback, right? So this is an extension of market structure. So previously, as I said, we learned about trends, right? From trends, we learned who is control of different trends. In an uptrend, we tend to see buyers be in control, right? In a downtrend, it's usually sell. It's not usually. It's always sellers in an uptrend until it changes to a downtrend. I mean, in an uptrend, it's buyers, right? Until it changes to a downtrend, we see sellers in control, right? And if it's ranging, there's no one. They just price movement up, side, and down, right? A quick example of that is this right here. This right here is a range, right? We don't see any movement at all other than price pushing sideways, right? So we see price pushing down, goes for a low, goes for a high, goes for a low, goes for a high. That's almost equal to this low. It's not breaking any structure to the downside until we have this right here, and then it jumps into a downtrend, right? So yeah, so this is a more practical example of price pushing to the downside impulsively, correcting upside, pushing to the downside impulsively, and then all that stuff. So Yeah, so you gotta put in mind that usually the swings, they're strong movements, right? And you usually want to trade those strong movements. Hence, going forward, I said we're gonna cover them on entries, right? On how you can use that to enter the market, because we try to jump on these moves, right? We try to jump on these strong moves so we enter the market in and out quickly as possible, because this move took place in less than 6 hours, right? So this is a 2-hour candlestick. So we got 1, 2, 3, 4. Right? We get 8 hours actually. So this happened in 8 hours. So we can jump on this trade, and within 8 hours we're done, right? That's within a day. So within a day we're done and gotten some good pips. So hence we're gonna be looking at for trading these swings more often than the pullbacks, right? So yeah, so that's on swings and pullbacks, right? We see strikes, price push to the downside, pulling back, swinging, pulling back, swinging. The same thing in an uptrend. We see price push to the upside impulsively, swinging, pulling back, swing, pull back, and swing, right? So in the next video, I'm gonna cover how we can use this market structure, right? We can use market structure, and then also break down this what you're seeing here that's written as boss, right? The break of structure. So breaking of structure to the downside. So price break structure differently, and different break of structures, they represent different things. They represent different meanings to in the market. So the next video I'm gonna cover different break of structures in the market, and yeah, we should be done with market structure afterwards.